So, what would you do to get high net worth individuals or even ultra high net worth individuals on LinkedIn, right? It actually seems like it would be pretty hard to do that, right? Most advisors are going after, people with 401k rollovers, people who just changed jobs recently. But in my opinion, most of those folks, they're not really interested in talking to an advisor. I mean, think about it. They just lost their job. They're not really super keen on talking about money, right? Because they don't have any money coming in, right? And plus, this is the other thing too. Every advisor is skating towards the same puck. It's like Wayne Gretzky always talked about, skating towards the puck, right? Before everyone else does. Everyone wants to, go towards the puck. Well, the problem is every advisor is going towards the same puck. They're all going for the 401k rollovers. They're all going for the same assets. They're all going for the same type of client when it comes to LinkedIn. All because it's really simple to turn on a filter that says change jobs in the last 90 days. But that could mean anything. That could mean you changed positions within a company. It could mean you change, yeah, it could mean a couple different things, right? So that's a little bit of a loose interpretation, right? That particular filter. So it's not reliable. So how do you find high net worth individuals on LinkedIn? Well, there's three types of categories, right? You have business owners who could be high net worth. You have executives, right? You also have liquidity executives with liquidity events too. So how do you find those people? Well, to me, it's really simple, right? I look at, okay, a couple of key indicators that I look for is what type of company they work at, right? What's the company headcount? Do they have, 10 employees? They have 100 employees. They have thousands of employees, right? Do they have, what's the position type? Are they C-suite, VP level, director level, right? These are all things that I look at. But even deeper, I look at, are they at a publicly traded company? How many years of experience do they have? How many years do they have within a certain company, right? Those are the things that I look for specifically for high net worth individuals with stock options, RSUs, right? So if you catch someone who has stock option window, an RSU window, a vesting window that they need, that they're going to have a liquidity event, right? Those are great people to reach out to on LinkedIn. Number one, because they're going to be high net worth. But number two, they're going to have a problem. And the problem could be anything. It could be tax exposure, could be diversifying their assets or their asset classes. It could be, making work optional. They've saved up all this money. They've accumulated all these assets, and they're wondering, hmm, how do I reach retirement sooner? I have a pile of money. It's working for me, but I don't know where to go. What should I do? The other group that I love to target is business owners, right? And there's two types of business owners. There's business owners who are going to exit, right? So they might have a business with 50 plus employees. I always look for business owners, 50 plus employees, 6 years to 10 years plus in their business. And I look for businesses that are selling that are really hot right now. So if you think about it, like tech businesses, those guys are always looking to exit. They're looking to roll up businesses. They're looking to exit their own business and sell it pretty quickly. Because they know they can, because they can exit to private equity. I myself and our clients, we keep very, very close tabs on what private equity doing right now. Like, for example, today is August 4th, 2025. And I know for a fact that a lot of private equity folks are looking at veterinary clinics. So why not target owners of veterinary clinics, like small veterinary clinic, not small, but I should say small to mid-sized veterinary clinics that do 2 to 5 million a year, right? They're going to exit for a pretty big multiple, right? Maybe 10 to 12x multiple, right? So that's what I look for is what industries, what company size, how long's the owner been there, and what industries are really, really hot right now for PE. And then you hit them with a message that asks them about exiting, right? Are you thinking about exiting your business? Do you want to exit your business someday, right? The other group that I look for is exited business owners, right? And business owners on LinkedIn, they're not too shy about talking about how they've exited a business. Maybe they've done multiple exits. Maybe they've founded multiple companies, et cetera. And you find that through keyword searches, right? And it's not that hard to find certain keywords on exited business owners' profiles. You just go on LinkedIn, you search for exited business owner in the top search bar, or even on Sales Navigator, which in my opinion is the best search tool on LinkedIn, bar none. And you just look up exited business owner and you go to some business owners, pages and you say, okay, if they've exited, what are the keywords? Exited, multiple time founder, 2x exit, multiple exits, acquired by, those sort of things. Those are great indicators for a business owner that actually has exited their business. So I guess the moral of the story is I don't like to skate towards the puck that every other advisor is skating towards, right? The 401k rollovers, people who just switch jobs, not great. What I look for is people who actually have lots of assets and have really big problems that you could solve, right? Problems that you can move the needle for, right? Problems they don't have the ability, the time, or I don't want to say smarts because these are anyone who's high net worth, they're a very smart person, but someone who doesn't have the time or the motivation to make that change themselves, right? They need that outside help. They want to delegate to someone like you. So I look for people with big money challenges who don't have time and want to reach a certain outcome quicker. And that's where you come in. You could plug into those situations where people have big problems. Like I said, tax exposure on liquidity events, making work optional, vesting windows, liquidity events for business owners. All of them are big ticket events that need outside help. So that's the moral of the story. That's where I would go on LinkedIn if you were to ask me where I would find high net worth individuals. I think Sales Navigator is so, I think it's underutilized in most senses. I think there's some people, and the number one thing that I find is the issue with Sales Navigator is some advice, and this is not really advisors, it's just anybody in general. When they go in, number one, they look at Sales Navigator, they're like, oh my goodness, there's so many different filters. I don't know where to start, right? So that's number one. Number two is they sometimes either, and this is kind of like the fork in the road. It's like you either over filter LinkedIn Sales Navigator searches or you under filter. And if you under filter, you get tons of people. But if you just comb through them just for 10 minutes, you're like, these don't look good, right? If you over filter, you get like maybe 100 results. And then yeah, you can get 100 people and they're really targeted, but I think you're leaving a lot on the table there. So my biggest thing is don't under filter, don't over filter, right? Really look at what are the best filters to create the outcome that you want, right? So again, the way I look at it is like, what's the company headcount? What type of company? Is it public, private, self-employed, self-owned, partnership, etc. um, how many employees are in the company, right? What's the company headcount? Because usually your company headcount will uh, be correlated with revenue, right? So if you're looking for business owners, like an 11 to 50 employee company will probably fall between that 5 to 2.5, maybe 5 million range, right? 50 employees above probably fall 2 to 5 million. Anything above that, 5 to 10 million, et cetera, right? If you go in publicly traded companies, it's very obvious the people that work there, they're going to have stock options, RSUs, equity compensation plans, et cetera, right? So and then, of course, the folks, if you're looking for someone who's a little bit older, right, you might go more than 10 years experience. You'll probably look for people who've been in their company and their position for more than 3 to 5 years. And again, the settings are less than a year, 1 to 2 years, 3 to 5 years, 6 to 10, more than 10. Like I like to go the latter. I like to go 3 to 5, 6 to 10, more than 10. Sometimes I just go 6 to 10, more than 10 years. It just makes it easier to find those people, right? And when you look at the top right-hand corner of Sales Navigator, you want to see at least a couple thousand results in there. So that way you're able to properly comb through and make selective choices on who you want to target. Targeting lower net worth people get you leads on LinkedIn. No, it does not get you more leads. Here's why. You might, okay, so let me backtrack here. You might start more conversations, but even if you start a conversation with a low net worth lead, like I guess the whole point of it is what is the point in starting more conversations, right? With low net worth people. Maybe it's you're trying to catch, low hanging fruit, which I totally understand. A lot of advisors want to catch low hanging fruit, right? Maybe they get $100,000 client, maybe $200,000 client, right? And I guess you would say they're closer to the low net worth range. But really, it's all about the message, right? If your message to market match doesn't make sense, the prospect, whether they're, if they're low net worth and you hit them with a message that is more tailored to high net worth people, it's not going to resonate. They're going to be like, this doesn't apply to me, right? Tax exposure messaging wouldn't apply to someone who has $100,000 saved up, right? They're more worried about, making more money. They're worried about making more income, right? Which is not really the type of client you want. So, The short answer is no, it does not get you more meetings, especially if you're using the wrong message. And even if you're using the right message, do you really want low quality meetings with people who are not going to fit your minimums, right? You might start off and say, hey, I'll take anyone at any time. To me, that's not a great strategy for any business for that matter. If you're especially someone who relies on having really, tight client base with a lot of assets in it, right? You want the best of the best in your client base. You don't want to just take anybody off the street, right? That's for newer advisors. If you're watching this right now, I don't think you're a newer advisor. You're probably someone who's fairly established, maybe even very established, and you want to build your book of business quickly and efficiently, right? And with the most assets possible. So how do we do that? Well, it's not filling up your calendar with opportunities. It's not, sure, sometimes it's a numbers game, but in reality, numbers, you can play the numbers game all you want, but if it's low quality numbers, what's the point, right? The qualitative numbers don't make sense. The quantity isn't going to make sense. So the way I look at it is don't try to fill your calendar with endless meetings of people who don't fit your minimums, right? And to be fair, like I said, you're not going to fill your calendar if your message is geared towards high net worth. If your branding, your personal branding, if your messaging on your profile, messaging that you're sending out to prospects is geared towards high net worth, the people who are below that minimum, they're just going to be turned away automatically. They're going to be thinking to themselves, this person doesn't work with people like me. He or she can't help me because I fall below the minimum. I don't have these problems that they're describing. I don't have the tax exposure. I don't have these big liquidity events. I'm not worried about making work optional, right? They're thinking, I got to work till I'm 70. I'm gonna have to take Social Security. I need something to get me passive income. I need maybe a side hustle or something, right? That's what their mindset is. You want to think about your buyer's mindset before you go and target them, because the way you target them is how you message them, right? So if I'm targeting lower level people, I got to message them with a lower level message. And again, we already established we're not going down that path. But if I target high net worth individuals and I hit them with high net worth messaging, right? Messaging that would only resonate with a high net worth client, I'm going to get actual meetings. Depends on how many messages you send out, right? That's where the numbers game comes into play. Depends on how many messages you send out, the quality of the message, and of course, the quality of your searches that you put in on LinkedIn. So again, just to wrap it all up, going after low income individuals on LinkedIn will actually not fill up your calendar, and you won't find a diamond in the rough doing that strategy, especially if you're hitting them with high net worth messaging. Your best bet, go after high net worth individuals best you can, right? Using some of the strategies I've just talked about, right? In this video and other videos to actually speak to those high net worth individuals and target them using Sales Navigator on LinkedIn. So when it comes to LinkedIn and Sales Navigator, and when you're trying to track the efficiency of your LinkedIn campaigns, the number one actually, there's three metrics I look at right off the bat is what's your connection rate, what's your response rate, and how many meetings have you set up from the responses that you get. Okay. So let's take it back. So connection rate, I look for always a 25% connection rate. That's like my baseline. That's what I look for. That's an average KPI or key performance indicator of what I look for. And so pretty obvious for every 100 connection requests I send out, I want to get 25 people to connect back with me. Okay. So that's step number one. Then metric number two is reply rate. Now, reply rate is anyone who replies and starts a conversation with me. So if I send out 100 connection requests, I get 25 people to accept the connection request. I want 20% of that 25 to respond to me. Okay. So now I have 20% of 25. So that would be about 5 to 10 responses that I get from, or that would, if it's more than 20%, it's 5 to 10 responses. I really would like 5 to 10 good responses from my outreach, right? And if I get 2 meetings out of 5 to 10 responses, that's a good meeting set, right? So really what the numbers boil down to every single week is I get 25 connections, I start 5 to 10 conversations, and I get 2 meetings. That's what I'm looking for. And the meeting doesn't have to happen that week, right? Some people meet with you, the week after, right? And what I'm really looking for from the responses is people to raise their hand and say, yes, I want to meet with you. I want to learn more about your strategy. I have this problem. I need help with it. So, yes, Mr. Mrs. Financial Advisor, I would like to meet with you to discuss how your strategy, your methodology, the way you do things can help someone like me. So, what do I do if the numbers are off in a campaign, right? What happens if I don't have a 25% connection rate, 20% reply rate, or more, or, 2 meetings a week? So, let's start with the 25% connection rate. Two things that I look at are, is my profile optimized for the person I'm reaching out to? And are my searches optimized for that person too? So, this is where a little bit of qualitative and quantitative data comes into play. So, what I look at is I look at the prospects that have actually come through the funnel. Now, if you use an automation software, you can pretty quickly see who you've sent connection requests to and who's actually accepted, right? So if I look at who's accepted the connection request and they look good, right? And they're good quality from a surface level, right? Their profile looks good. They fit the criteria of the years of experience, businesses, industries that I've targeted, and they're not connecting. Sometimes I'll look at the profile and say, okay, what's wrong with the profile? What's the headline say? What's the about section say? What's the banner saying, right? I don't send a connection message with my connection request, so that doesn't really become a factor. If you send a connection message with your messages, that or connection requests, then that's something that I would look into. But number one, if the prospects are good quality and they're not connecting, I look at the profile. Conversely, if the profile is fine and the prospects are connecting at 25%, then I don't have to worry about that, right? It's mostly the profile that I look at. Or it could be we look at the prospects and we say, hey, none of these prospects really fit the criteria. We need to tighten the filters, right? So most of the time, like I said before, if I have couple thousand people in my search and I'm not getting the right folks or they're not connecting, I go and I try to tailor the search a little bit differently. I might use a completely different search criteria, or I might amend the filters that I have to make sure, number one, I have, you know, either a tighter filter, right? So like less or more years of experience, right? Tightened industries, right? Um, an older crowd, perhaps if I'm looking for people who are closer to retirement, right? I might bring in the window from 6 to 10 plus years of industry experience all the way down to 10 plus years of industry experience, just as an example. So those are some things that I look at for the connection rate. The response rate is a little bit different. This is where I make the most tweaks, right? The connection rate, not so much. The response rate, I make the most tweaks on. And that's the one that has the most variables too. So if you think about it, response rate depends on who's connecting, what message you're sending them. So number one, I always look at who's connecting. Again, if they're high quality folks and the message isn't getting replies and it's below 20% reply rate, that means that the message needs to be adjusted. If I'm getting good reply rates, but the people who are coming in are not great quality and they're meeting and they're not good quality prospects, that I definitely need to change the search. Like I said, I need to tighten the filters. So let's go to the message itself. Let's say, and this is where I see the most problems, right? It's good quality prospects, but the message needs to be slightly tweaked. Every single time, almost every single time. I can't say it with the exact thing every single time is not this, but I see it 95% of the time is the message, the hook of the message needs to change, right? What you're asking them first. So that first line of a new message is always the most impactful line when someone reads that. It determines what path the conversation goes, right? If my hook, that I call it a hook, right? That first sentence, and it could be a question, it could be a statement. When I do that hook, that's the one thing that prospects zero in on. So if the hook is good, the prospect will say, "Hey, that sounds interesting. I want to learn more." If it hits the pain point trigger, if it's a trigger for them and it hits a pain point, they're going to say, "Hey, I want to learn more." If it's not hitting the trigger, if it's not hitting the pain point and it's sending them into a different direction, they're not going to respond. You're going to get a lot of no thank yous. So the number one thing I change when a campaign is not going the way we want, specifically when it comes to reply rate, is I always change the message. I always change the hook of the message to reflect what pain point we're trying to trigger for the prospect. So in short, what I look for, 25% connection rate, 20+% reply rate, 2 meetings a week. If my connection rate is low, I look at either A, the search criteria, or I look at the quality of the searches or the profile, right? To see if the profile is actually going to attract the people that are actually coming through the funnel. But the real pain point is where I see the reply rate being below 20%. If the reply rate is below 20%, what I look for instantly is the message hitting the right person? If it's hitting the right person, great. Now I need to look at the message itself if it's below 20%. And I look specifically at the hook and I see qualitative data, what people are saying back to the message. If they're saying no thank you, if they're saying they're not sure, if they're saying yes, right? If there's a lot of no thank yous, then the message is off. So I change the hook almost automatically every time. If the reply rate's low and the quality of the searches is good, I always change the hook. So in short, 25% connection rate, 20% reply rate. Obviously, I want to get 2 meetings a week out of that. And I always look to change the hook if the reply rate is off.